Welcome back, everyone, to another episode of Ready, Aim, Retire. I'm Rob Kirvan, your host. This is the show where we talk about everything from how do we distribute assets efficiently? What do taxes look like? What's my legacy going to be for my family? And everything in between. Folks, markets don't just move in straight lines. And this year reminded us of that. But before we kind of dive right in, I have to say hi to my man in Minnesota, Mr. Tony Shore. Tony, how is Thanksgiving? This is the first show after Thanksgiving. Give me your day. What did you do?
Well, yeah, I haven't talked to you since before Thanksgiving, Rob,
Right.
and I had a great one. It was actually fairly chill. In years past, we've done up to 3 different family Thanksgivings,
Right.
right?
Right.
We do our
Yeah.
own, then we do Sarah's side, then we do my side. This year, we really did only Sarah's side, and we went out with the kids another night over the weekend, but,
Hmm.
um, we went to Sarah's brother's house, and his wife is the best cook, and she made I know it sounds boring, but the mashed potatoes. She made these garlic mashed potatoes with the seasoning, and it was the best. I don't know how she did it, but it was the best mashed potatoes I've ever eaten in my life.
No kidding.
And then there were,
And I bet you've had a few dollops of mashed potatoes.
oh, I grew up on a farm in
Yeah.
Minnesota.
Yeah. That's saying a lot. Like that's saying a
I've
lot.
eaten my own weight in potatoes at one sitting. Let's
Right.
put it that way.
Right.
No, I'm kidding, but
Hmm.
yeah, I mean, I had the opportunity to overeat. I didn't do that as much as I have in past years. I'm trying to watch it, but the food was good. There were 3 kinds of pie,
Oh,
and just really good homemade pie. So, the food, I'm focusing on the food, but the gratitude was there. I already told you I thought of you
hmm.
Thanksgiving Day. I'm with my family. Who am I thinking about? Rob. And all I could think about is, man, I really hope Rob is overeating today as well. I
And
don't
you got your wish. You got your wish. That happened. It
No,
happened.
I appreciate you and all that you do for people in the community, and allowing me to hang out with you each week is so much fun.
Well, we have major gratitude for you hanging out with us, Tony.
Oh
That
yeah, it's fun. Yeah.
we had our client holiday party last night, and I probably had a half a dozen people come up, Tony, and asked about you. And
Oh, that's
Tony and I were just talking off air, and
nice.
we're gonna bring Tony down for the next year's holiday party. Like
Yeah, I'll get up and tell a
people
couple
are
of
gonna see the
jokes.
man behind the camera.
Yeah.
They're gonna see what he's all about, his deal. He's nicer in person, if you can even imagine. He's actually nicer in person.
Yeah, I'll get up and tell a couple of jokes
Yeah, yeah.
go around and talk to people, get to know people, and I like to ask people, do you watch the show? Do you listen?
Right.
If you watch, my sympathies. I mean, I'm, got the perfect face for radio. If you listen, that's great. But seriously, I had a great Thanksgiving. How about your Thanksgiving though? I know you had the Christmas party with your clients,
We
but
did.
your Thanksgiving, was the whole family home this year
The
or no?
whole family was home. So we have I guess it's our tradition. So here's our tradition. We go Thursday morning, 7 a.m. Naperville has
The
a
run.
turkey trot, right?
Yes, and do you force the
I forced
family?
them to go,
That's
and
right.
I started when they were like just as of drinking age. Now,
Yeah,
I have one that's kind of just north of there, but the other ones are 28, 29. But
sure.
I started it there because they would go out Wednesday night, Tony, and they'd
Oh,
roll in
yeah.
at 3 and
Yeah.
then lay around and they'd roll out of bed. They'd roll down at like noon. Hey, what time's Thanksgiving? So I started it way back then. And this year it was 18 degrees out. It was freezing. And I actually thought of not doing it. And I'm like, you know what? It might even be too cold for me. But I'm like, if I do that once,
Yeah, then
then they'll
it
get away with
slides
it forever.
into every year you'll come up with they'll say, "Well, we didn't have to do it
Exactly.
last year. I don't wanna do it this year."
Right.
So you made everybody get out in the freezing cold
Yep. Yeah.
and run.
Yeah. Well,
How did that go
we
over this
walk
year,
it
by the way?
basically. Pardon me?
How did that go over this year, by the way?
They're always kind of grumpy on the drive down. It's only like from my house, it's like a 4-minute drive to where we got to go. So they're kind of grumpy, but once they get the legs moving, Tony, they get into it. They're
Sure.
fine. And then we go back to our place, and then we have, neighbors, friends, almost anybody. It's kind of an open house, really. And then we have like food and drink and stuff like that. So I think we get that this year was like 30, 35 people. kind of roll in there. They hang out for as long as they want before they have to go to their family kind of stuff,
Sure.
right? It rolls into a flag football game. Where this year I'm happy to announce to everybody that my team won. And I got the
Oh,
winning touchdown, Tony, this year. So
you're
last
kidding
year I
me.
got injured. I got injured on there because
That's right. I remember that.
yeah, these kids that have grown up around me, they were like because they were my daughter's friends, so they all have it out for me. Like, and they're in their 20s, and I'm obviously 50. So it's like, they have a physical edge, but I have the mental edge. So last year I lost my
Okay.
mental edge because they took me out. This
Right.
year I got it back. So yeah, we took down the victory. So all was well. All was well.
Oh, good. Well, you had a great Thanksgiving weekend
Yeah,
then.
yeah, it was
And your
fantastic.
Thanksgiving went well, and you
Mhm.
got some grumbling out of the family, but everybody went. Does Natalie go do the
Oh
run?
yeah. Oh yeah.
And Abby?
Abby, yeah, everybody.
Wow.
Everybody. Yep.
Wow.
Yeah. Oh no,
Wow.
it's a thing. It's a thing
That's
for
cool.
sure.
I think that's a great tradition.
It is.
I really do. I think
Yeah.
that's very fun.
Yeah.
Now, so I had a good Thanksgiving. You had a good
Yep.
Thanksgiving. Hopefully, our listeners and viewers, but we have a lot to be thankful for. I mean, your family, my family. I
For
feel like
sure.
Rob, you and I are truly blessed with our family. Our
Mhm.
families. And I love the phrase somebody said, I mean, gratitude is what it's all about, and
For
I am
sure.
grateful. I know you are as well, and trying to give back. But I heard this great quote, and that is, and maybe you've heard this, it's floated around, but um, I come from a very, very rich family, and sometimes we even had money. You see what
That's
I
a
mean?
great one.
Yeah,
That's a
yeah,
great one.
yeah. It's
When
not
my
all about the cash, right?
No, it's definitely not. Like,
Yeah,
when my kids were young, one of my sayings was gratitude before attitude. So then when they would be like, kind of misbehaving, or that's what I'd always use, gratitude before
sure.
attitude. You're lucky to, be what you are, and everyone's lucky. If we're doing what we're doing right now, Tony, we're very, very lucky to be doing this and very thankful.
Yeah. Yeah. Yeah, and then the one other thing, really quick before we jump into today's topic. When I got up this morning, and let's see if I can pull this up here. I just want to show you. I am in Minnesota. I want to remind our listeners of
Mhm.
that. And when I got up this morning, this
Oh,
is my. I looked at my
oh,
clock or
that's
my
terrible.
phone. I looked at my phone. I live in Stillwater, Minnesota, and this was the temp outside when I woke up this morning.
See, you might have thought 18 degrees at the Turkey Trot was kind of balmy. You might have thought that was kind of like a nice warm
That's
day.
short pants
Right,
weather.
right,
I'm putting
exactly.
on the short pants at
You're like,
18.
"Sarah, leave your jacket inside. It's 18 out. It's beautiful."
Low to date, -9. So, but I
Wow.
think we've already hit that. So, just thought I'd show that to the kids
Wow,
out
folks.
there.
What that's
That's
just, and we get clients all over the country. The ones in Florida and Arizona, this is
Yep.
the time of the year they kind of perk up because, they say, "Oh,
Oh,
hey, how's the
sure.
weather, Rob?" Like, I
Yeah,
get a lot of that,
of course.
and I'm jealous of them.
Oh, of course. So, what
Okay.
are we talking about today? You're talking about the year in review and some bold predictions for 2026.
Yes. Yeah. So we're into December. We know what happens this time of the year. The year just kind of disappears in a massive hurry, right? So I
Sure.
want to make sure that we have just a little year in review for all our listeners, and then I'm going to throw out some predictions of what I think the market's going to look like next year. And this year was kind of one of those wonky years, Tony. It was one of those years where you didn't know how it was going to end. Like in February, you might think, geez, this market is going to go down, down, down. The tariff hits down, down, down. And we're like, oh my goodness,
Here we
but
go.
here we go. Right.
Yeah.
So we had a lot of noise this year. We had the soft landing remain the dominant narrative. Can the Fed make a soft landing? Are they going to cut rates at the right time? Things like that. The tariff thing hits. We had interest rates kind of whiplashing stocks and bonds because everything's anticipating these rate cuts. But through it all, we sit here and with markets almost at an all-time high. Through it all, and that's kind of the narrative of being a long-term investor. Being a long-term investor is really, these bumps will happen. You have no control over those, but what we have control of, if we are investing in good companies that have good outlooks, that we believe in and have good fundamentals, we believe, hey, they will also have ups and downs, but we believe there's going to be more up than down, right?
Right.
So we have, what else do we have? The major themes this year. AI boom entered its second year or second
Yep.
phase, I would say, right?
Sure.
AI is obviously everywhere. Even here, now we use a AI note taker. So when we meet with clients, it's an AI note taker. It's very good. It's only financial stuff. It kind of AIs, but what it does for us is one, Tony, I'm a terrible writer.
Sure.
Like my penmanship it's embarrassing. And
You
so when
might
they're
as well
doing
have been a doctor
I
at this
should have been a
point. Your
doctor.
writing is so unlegible. Yeah.
Yeah, I could be mistaken for a doctor if they just saw my yellow pad, uh, but, like, the people like, our staff here and stuff, they have a hard time reading it, to be honest with you, like, when they're doing the tasks that we have to do after we meet
Oh,
with somebody. So
poor Natalie and Abby.
it's been a godsend. It's been so good. It refines everything, it organize and the other thing it does is, when you meet with somebody and they got their head down and they're writing notes, and
Yeah.
then you're talking, and you're like, "Wait, are they actually can they hear what I'm saying?" Because you're writing now you are, very present in every meeting. Like, I absolutely loved it. We had to do some testing and things
Well,
like that to make
sure.
sure, we saw what data came across, but we probably started it, I don't know, 2 or 3 months ago, and it's been pretty good. So,
And a
we're
life
part of that
changer,
phase.
hasn't it?
We're part of the AI phase, and we use things that are in there, but it's a big theme. It's definitely a big theme, like with different companies and things like that we look at that we invest in. Um, what else do we had the tariff tantrum, spoke on that a little bit. Here's another one. Consumers. So for the last several years, Tony, people saying, "Oh, the consumer, like it's going to drop," and our entire economy is based on the consumer. It's based on you, Tony, going to Thanksgiving dinner, putting a tank of gas in, bringing a dessert or whatever you bring, your sister-in-law, the amazing chef, her purchasing items, bringing it in, people sharing it, and money just kind of keeps on this flywheel of sorts, right? And that's
Yep.
kind of how our economy works. We're not a manufacturing economy by
No.
any stretch.
It's completely consumer driven.
It is. And when the consumer cracks, that's where we see recessions and things like that, and they have been incredibly resilient, like
Yeah.
throughout this. And we are watching, there is some things that we're watching. Credit card debt seems to be elevated. It definitely seems to be elevated, but it also seems the consumers working their way through that. I think if you see mortgage rates come down, um, through these interest rate cuts that we've seen, I think you'll then see some refinance opportunities for the people that purchased homes at 7% or 7.5, and maybe they can get a refi for 5.5, something like that, which will give them a cash infusion. But we don't want credit card debt to get too high. We don't want car loans and things like that to go, unpaid and things like. So we look at the consumer more than almost anything, and
Yeah.
we put that across to unemployment and things like that. So, but the trend, this year, the major theme is the consumer. The shopping, Tony, on Black Friday and Cyber Monday broke records. It broke records again. They said, "Oh, maybe it'll be a little softer." It broke every record again. So
Yeah, I'll be honest, I would have had that completely wrong. I assumed that this year, because of the just massive increases in prices over the
right,
last 4 years, 3, 4 years, sure, the market's doing great and consumer spending has been up, but I just thought, this year, days like Black Friday and Cyber Monday, those indicators, they'll probably be softer this year because, even though there are sales, things cost more. I had that wrong. I thought it might be
yeah.
softer as well.
I would have thought that. I would have, because we read the data on the consumer all the time. The unemployment ticked up last month a
Yeah.
little bit. So I would have thought that too, that people maybe, you know what, maybe I won't take advantage of these. Let's just see how life goes over the next few weeks and maybe buy some more stuff then. But yeah, you're pretty incredible. Um, Another major theme, international equities, which have been doing nothing for a decade, like Europe
Yeah.
and Japan. They actually outperformed so far our markets. And I say so far, but they're going to outperform our markets by probably double this year, and
Which
it's
is
been
saying something because our markets,
our
other than
market's up.
April,
Right.
have hit records. So,
Yeah.
and that international market has tanked. I mean,
It,
it was bad. Like, I
it
mean,
hasn't come back since the great financial crisis. Like
Right. Since 2008, it's really been bad.
it's
Yeah.
been nothing. They're like, there's no return there whatsoever, So they got some strut in their step, and they had a very, very good year. Surprises this year, Tony. Here's some surprises. Somehow, we're talking about markets, they shrugged off all the geopolitical risk that was out there. All the things that happen. If you just think of
Tariffs,
geopolitically,
wars, the Middle East,
right, the bombing
political turmoil, partisan
everywhere,
politics. People thought, oh man, that's really going to have a negative impact, all of that.
right.
And the markets, it didn't affect the market. In fact, the markets went up.
They went up. Yeah, they went up. And people sometimes get confused by that. But you have to look at, especially the US stock market is US companies. Now they do business all over the world, but
Sure.
they're domiciled here, and we have a lot of data on them, and we have a lot of forecasting on them, and so we're able to kind of really keep ahead of that, and get rid of some that maybe not may not do so well. But the geopolitical stuff, unless we were big traders with a particular country, then it does shrug it off. If there was something with China, perhaps there might be a problem. You would probably see something like that in our markets, but they shrugged off a lot this year. The Fed, Tony, remained pretty patient this year, despite the inflationary bumps. The Fed had a lot of pressure. The administration wants them to cut rates and cut rates and cut rates and cut rates. But I thought they did a bang up job. You got a couple rate cuts in there, possibly another one this month. I'd be leaning that probably another one this month. A month ago, I probably wouldn't have said that. I would have thought they may hold off, but you do have some of these things ticking up, and they want to put a pin in it. But folks, for all of you that want a whole bunch of interest rate cuts, if they were cutting rates at a rapid pace, what they're telling you is there's a problem in our economy 6, 8, 10 months down the road. So you don't want to see that. You want to see something, how they're doing it, where it's very
incremental,
incremental, data dependent. They're not making, like they're not doing anything too out of the box. And that's what you want your Fed to do. I want low interest rates just like anyone else, Tony, but I would rather have a strong economy. Small and mid cap stocks recovered. They've been in the dumps too. And the last surprise I would say is we know the Magnificent Seven, that broadened out. The tech broadened past the Magnificent Seven. Like Amazon, for instance, is up 6-7% this year. Well, the S&P is up 12. Where normally it would be up 20 something, pulling the S&P up. And so some of these big and Tesla's the same. It's not up a tremendous amount. So which is very good for the market, by the way. You want the broadening out. You want other companies participating. 7 companies cannot lift this thing forever, and eventually they stall out.
So, and even fewer at some points in the market we saw had NVIDIA. We had that one NVIDIA bump, and they were saying, NVIDIA's up, but if you removed NVIDIA from the picture, the whole market would be down.
For sure.
Like one company.
Right. Because of the way that index is. Like if you took I think those 7 companies account for 40 or 45% of the actual return in the S&P 500, which is ridiculous.
Crazy. Yeah.
Like you have 493 other companies, that haven't been participating because everyone's kind of throwing their stuff into these pockets. But I'm watching I'm watching the outflows of that. They're not, they're not great. And these are, let's face it, these are very valuable companies that produce a heck of a lot of cash. So they should be, the cream of the crop, but they can't be the whole thing, so I like the broadening out of that.
Yeah, their income to debt ratio, just for our listeners out there, some of these companies like NVIDIA and at some points, at different points, Apple, and these companies, at some point, their income to debt ratio is way better than the United States government.
Oh, yeah.
I mean, these companies are doing better than the U.S. government.
Oh, yeah. The $4 trillion companies, these are massive companies.
Yeah, they're doing, in fact, they have more money than a lot of countries out there. That's what's crazy. A private company having more money than a lot of the countries.
I would
Not us.
argue that they're probably run better than a lot of the governments.
Well, sure. I mean, there's
I
that.
I would argue that, like, they
Yeah.
are
Yeah.
highly tuned machines,
Yeah.
that in whatever segment they're in, they just do very, very well, they're the cream of the crop, but I do love these other companies coming up, and I think you'll see a little bit more of that with the AI, coming through because these are breakthrough companies that, that will be utilizing. We don't know who wins the AI, arms race at this point in time. Like, you could say things like ChatGPT. Well, if you went back to the year 2000 when everything was happening with, the internet and things, like think of Netscape and think of the first browsers available. Google didn't come around until I think 2002 or 2004. Like they weren't in the big .com thing. They came around after. So we don't know who the winner of all of that's going to be yet. That's why diversification obviously is very big. You don't want to have all your all your apples in one basket because if that basket breaks, your apples are spoiled, right?
Yeah.
That was actually a good analogy. I just
Look
kind of
at
made
you.
that up. I
Yeah.
just made
Look
it up.
at you on the fly
Yeah,
too.
that was just right out of my head. All right, so key lessons for this year for investors, Tony. Time in the market beats trying to time the market. This year is the epitome of that. We've had some like the Terra, first of all, new government comes in, market gets a little shaky. Tariff happens, market goes down quite a bit. People are in panic mode.
April. People sell.
Oh,
People move to cash because they're trying to.
big
They
time.
get out. They're worried the bottom's going to drop out.
Yeah, buy
But a
high,
month
sell low.
later, record highs.
Yeah,
So should have stayed in.
should have stayed in, should have been patient. We went through September to really mid-November, kind of. Market did nothing. Kind of went up, went down, went up, went down. No return. Traded sideways, which, by the way, is a good thing. That's consolidation without having a big correction. So this year was a good lesson for that. Diversification and with reduced volatility. That's another way to do it. Tony and I just talked about, you have all your stuff on the Meg 7 when they break down. There's lots of opportunity somewhere else, and you have to have kind of a barbell approach.
Sure.
Have the winners. We obviously hold them like anybody else, but we have several other portfolios that actually don't even have them.
Yeah, there's been a couple of points in the last 3-4 years where I made the statement, the Magnificent Seven is looking more like the just okay 10. Right? It kind of moved to the just okay 10
Yep,
because there was
yep,
maybe 10 companies that were doing just okay
yeah.
when the market took a dip. And so, but then, hey, I thought it might stay that way or get worse, but it got better. So,
Yeah, they did. They like, and they're kind of accelerating at different times,
Yeah.
it seems. But and Google, which has done nothing, is now it's rocking and rolling, So, but again, diversification beats all. There's no doubt about it. Bonds regained the attractiveness this year. So a lot of our clients, Tony, as you can imagine, they're either coming into retirement or they're in it, and they by risk tolerance they might be in a 70-30 stock to bond portfolio or 60-40. Well, these bonds have done nothing for a decade. Interest rates have been very, very low. Well, now we see, oh, you know what, interest rates a little bit more elevated, so we can make money on the bond side, which is our kind of our safety net, right? It's not a pure safety net like an annuity, but it provides a little bit less volatility inside of the market, right? So they're becoming a little bit of attractive for sure. Corrections to me always provide opportunity, and we see them every year. There's at least one for whatever reason is going to happen, and I look at that as opportunity. Like I look at that as, okay, great, now we got even a better entry place, and so do many others, because that's why markets come back. They go down like this because people sell. They go back up because people buy. And usually the ones that sell aren't the ones buying, Tony. They've sold.
Right.
They sit in cash and they kind of trying to figure things out, right?
Yep. Exactly. Yeah, boy, if you moved to cash, say this April when it's, the market fell out and you didn't get back in, you really hurt yourself and missed out.
Big time. Yeah, big time. And people did, Tony. I can guarantee you this is that I can't use the word guarantee. So I would put this hypothesis out there that there's people that sold in April and they're not back in the market yet. Because
Wow.
when you sell, you've sold the position, and now you need the perfect time to get back in again. When is that? There isn't. And it's the old thing, like I always say, time in the market beats trying to time the market, but it's so true. Panic, when markets go down like that, we don't get phone calls here because our clients understand market cycles. Our clients they're, some of them have retired for 10, 15 years. So they've seen a lot in 10 or 15 years,
Yeah.
and I have a client that's been retired 40 years. Like, she's seen it all. Like, she is unfazed by anything. Like and the longer you're kind of in that phase, the more you become unfazed, the more you just enjoy yourself. It's more people when they first retire, you're kind of watching it a lot more than you ever did. And you forget that you got what you got because you actually never watched it. You maybe had some help and they were doing it, but you weren't looking at it the 3:00 close every day, wondering what the markets are at. And all of a sudden you retire and you become this, you put your investor hat on, and now you start to worry. Now you start to live life, and that's why people hire us, and that's why people work with us, because that's our job to worry about that. Your job is to plan their vacation, go hang out with family, go have a great Thanksgiving, like me and Tony were talking about, like doing those kinds of things.
Yeah. I mean, you don't necessarily have to go on a 5K when it's 18 degrees on
No, you don't.
Thanksgiving morning, but I think that's a good tradition for your family. And I do mean your family. I think
Right,
it's a good
right.
yeah.
Yeah.
So, but now let's move on, and just really briefly before we end the show today, Rob, you said you have some predictions, some bold predictions for 2026. Now, I know one of those you were going to talk about. Your bold prediction for 2026 is that Tony will continue to eat a lot of pizza. That's not a bold prediction. I think we all know that.
There's certainties and uncertainties in life. That's a certainty.
Yeah.
Tony.
I mean, there's death, taxes, and pizza. Those are the three certainties in life.
Yes.
But
I would agree.
what's a bold prediction for next year?
So, bold's a strong word, but
Okay.
I'll give you Tony's really built this up.
I put you on the spot. Yeah.
But I do feel this. I feel the Fed will cut rates more slowly than markets expect. I believe that. I believe that we're going to see that. I think the next leg up in our markets is all going to be about corporate earnings. So it's not going to be about cutting rates. Like, currently, the market is being helped by the anticipation of rate cuts.
Right.
Companies like lower rates, just like we like lower rates. I think the corporate earnings will be the drive of the next growth. I think AI winners expand way beyond the current leaders. So all the ones that we just talked about, Tony, I think we see. I even think it's more than just 2 companies. I think we probably see 3 to 5 companies that just come out of nowhere and take over this AI space. Again,
bump the companies, maybe possibly even bump some of those Magnificent Seven
I think
down
get
a
on the
bit.
way to bumping them and maybe bump their return, right? Like, maybe things rotate out of there to these new ones, because it's kind of like the age of the internet, right? So like all the winners aren't the ones that started it. They continue to come along, right?
True. So maybe it'll be, and like you said, expansion's a good thing. So maybe the market will be carried by the end of next year, carried by 10 or 12 companies rather than just 7.
Yeah, I would totally agree with that. I would totally agree with that. I think we're going to see, and Mike Binger, spoke about this at our Christmas party, that in the first quarter, we're going to see I would say like a 10 to 12% correction. I think we see that in the first quarter when no one's expecting it, for no reason, really. And we need, and that's a good thing. Again, the last correction we had that was above there was April, when the tariff thing happened. We've kind of gone straight up since then, so those things kind of level the playing field in the market. So I think it would be a good thing to have that happen early, personally in the year, and it kind of, you get it behind you. Otherwise you're waiting, so it's like, you're just wait. Like, if the market goes up the first 6 months, you need that correction. It happens every year. And it shouldn't be a surprise to anybody listening that, like, when the markets go down for 5% or 10. Like that happens every year, but yet people are surprised by it. And people are like, oh my goodness, what should I do? And I'm like,
It's because the media, it's the sky. If the market drops 5-10%, the headlines are everywhere. Market collapses, or
Right.
it's the doom and gloom, the fear.
It is, and it's in our face. Let's face it. Like
Yeah.
the media's at us, and we, and really, doom and gloom. Tony sells more clicks than just being average and normal, doing its regular thing. That doesn't sell clicks. Oh, the market went up today. Okay, but oh my gosh, is this the crash of 2026? That sells clicks. That gets little 30-minute specials and stuff like that. So know that you're the audience, folks. You are the audience.
Yep.
I do think U.S. consumer spending slows next year. I think and again, we were talking about the holiday shopping is breaking records. Tony and I both kind of said like, that's with the credit card debt where it is, the consumer just seems to find a way, which is great. That's what we want for our economy. But I think we see a noticeable slowing next year. And just maybe taking a time out, like just consumers letting all right, I got to catch up on some things or whatever. We'll see. And I do actually believe too, Tony, that international outperforms again next year.
Really? Okay. Now I think that's anytime anyone tries to make a prediction about international markets, I do think that's bold, right? But it's a take, and I think that
I think there's follow through with where they're at. I think they're very undervalued companies over there.
Sure.
But again, they could go down again next year. But I believe, I think we get follow through. I think they do well next year. I really do.
That'd be good. Well, these are great predictions and a great recap. The year in review. I mean, you covered a lot today.
You had a lot of ground there, Tony.
Yeah. And so if people are like, hey, I don't have a financial plan in place, or I'm concerned about my retirement income, or I'm thinking about retiring soon, or maybe how do I save for retirement? Do I have enough? All they have to do is pick up the phone, give you and your team there at Advanced Planning a call, and set up that no charge, no obligation consultation. How can our listeners and viewers do that?
Well, if you're listening on the podcast, our number is 630-780-1099. If you're watching it, you can see it. But we'll say it again, Tony. 630-780-1099. Also, go right to our website, apadvisorsgroup.com. apadvisorsgroup.com. You can book an appointment right on there. You can see a lot of information on there too. Great videos and things you can learn from, and more videos of Tony and I, so who doesn't want to see that? But I would encourage people. This is the time of the year, Tony, where you just came out of Thanksgiving and you're reflecting. You're like, okay, where am I at? And this is when people start thinking, if you're retired out there, is everything the way I want it to be? And we talk on this show not only about investing, but we talk about legacy. We talk about, the 4 pillars. And you wonder, like, is everything kind of the way it should be? This is the time. You give us a call. You come on in. You roll up the sleeves. Come in now. Come in at the beginning of the year and make 2026 your year to get things organized. And get things on the right track. And like Tony says, it doesn't cost you anything. That's the best deal in town, to get a second opinion review of what you're doing by a fiduciary, where we have to, we have to show you this is exactly what you're doing. It's apples to apples. So I would encourage people to do that, especially this time of year. Everyone gets a little bit more planny.
Yeah, exactly. That number again, 630-780-1099. And Rob, great show today. Listeners and viewers, that does it for today's episode of Ready, Aim, Retire with our host, Rob Kirvan.